BC tax assessments are hitting mailboxes everywhere, right across the province, whether it be to the dismay of a homeowner or to the excitement of them. This video is really meant to help three categories of people. If you're a home seller, I want to help you identify the year-over-year changes in property values in the Fraser Valley and the Lower Mainland. So not only can you have an idea if your tax assessment is fair, but also help you appeal it if you think it came in a little too high. If you're a home buyer, I want to let you know how tax assessments play a role when it comes time to purchase your next home, how you can use them to an advantage, and why they matter. And the third group is for all my homeowners out there. I've got some information in this video that you're going to want to hear as well today. You're going to want to hang around to the end of this video as well, because if you're a homeowner or a home seller and you feel that your assessment came in too high, I'm going to arm you with the information to successfully investigate and appeal your tax assessment notice so you're not paying more than you need to. If that all sounds good, let's get into it. Hi, my name is Darren with the German Group and McDonald Realty in Surrey, British Columbia. If this is your first time on the channel and you want to know everything about living in Surrey or White Rock, British Columbia, be sure to subscribe so you are the first to know about any updates regarding the communities that you want to live in. We get calls, emails, and texts every single day from people looking to move into Surrey or White Rock. And we absolutely love it. So whether you're thinking of moving in 9 days, 90 days, or 9 months, be sure to give us an email, give us a call, or shoot us a text message and let us know how we can help you be successful in your next purchase. We'll make your move to Surrey or White Rock a smooth one. Okay, so can we start this video maybe with a little bit of education? And if you feel like you don't want to be educated on tax assessments, then just check out the chapters. You can skip ahead, but I think it's worth understanding for everybody out there because they're so widely misunderstood. Let's go back down to Tax Assessments 101 and understand what really is a tax assessment. This is a value of a property, and it could be a commercial property, it could be a residential property, but this is provided by the BC Assessment Authority to local governments for the purposes of taxation. It's important to note that these numbers that they provide are based not only on the type of the property, but also on how the property is used. An example of the differences on how a property would use would be a commercial property that operates a for-profit business versus maybe like a elementary school, which is obviously a non-profit and the community is largely invested in. When a local municipality sets its tax rates and determines how much they need to really fund the operations of the community, they rely on the BC tax assessment numbers. This way, as a community, we can all know that these numbers are largely accurate, largely fair, and help go towards fund things that we use and need every single day. And these are things like police and fire and hospitals and educational services and transportation and infrastructure upgrades. Anything the community needs and any services that the community might require. That is where all this money goes. But to get the details on exactly where your particular tax dollars go, you need to go directly to your municipality's website rather than BC Assessments. Before we continue any further, it's also important to understand that there's three types of values used in real estate to determine values, and they're all really different, and most people don't understand the differences, so we're going to talk about those right now. I go into full details on these on another video I did during COVID, so if you're interested in seeing a really brutally produced terrible video where you can go back and actually judge my old video filming and editing skills, yeah, you can check it out. Comment on it and let me know if it helps. There's some good information on there. It's just not very well done. The three types of values are the provincial assessed value, which is BC assessment. You have an appraised value, which is usually done by a professional appraiser for purposes of maybe getting a loan on a property. And then you have market value. So what are they all? Starting with the provincial assessed value, this value is determined by provincial government bodies such as BC Assessment in our province and used primarily for tax purposes to calculate property taxes. The assessment is based on the property's market value at a specific point in time. In our case in British Columbia, it's of July of the previous year. It considers factors like location, size, age, and quality of the property, as well as sales of comparable properties in the area. Important to note, it does not always reflect the current market conditions as it's based on past data and standardized assessment procedures. The next is the appraised value, which is usually determined by a professional appraiser, a third-party appraiser. It's a detailed and personalized valuation often used for loan underwriting by banks or other financial institutions when a mortgage is involved. The appraiser examines the property in detail, considering factors such as location, condition, improvements, and the current real estate market. This value is considered accurate for the specific time it's completed and provides a snapshot of what the property is worth in the current market context. So we've got the provincial assessed value, we've got the appraised value, but there's one that's much more important in my eyes, and this is really where we as realtors play all day in this arena, helping either home buyers or home sellers better understand this number, and that's market value. Market value represents what a willing buyer would pay a willing seller for a property under current market conditions where both parties are under no undue duress. It's influenced by numerous factors, including supply and demand, economic conditions, and the property's appeal to buyers. Unlike assessed or appraised values, the market value is what the property actually sells for in the open market. This value can fluctuate more rapidly than assessed or appraised values, responding to real-time market trends and conditions. So based on all that, we know that the BC assessment values, they come from the previous year, assessed as of July 1st of the year prior. An appraised value for lending purposes can happen obviously when it's ordered, and market value, well, that's today. That's whatever time and date that you're watching this video on. That's what market value is. It's what someone is willing to pay for a home as of the date that they write an offer or are prepared to buy it. And it also matters what the seller is willing to sell it for. Now, people have a really, really complicated relationship with tax assessments. People will always have a level of concern, whether their property goes up or down, because that can mean different things and mean different things to different people. But just because, let's say in an example, that your property tax goes up by 10%, does that mean your taxes go up by 10%? Can you imagine? I mean, my gosh, with everything as expensive as it is these days, 10% more in taxes for your property taxes, that's a pretty tall ask, right? When your property tax assessed value goes up, it doesn't imply that your property taxes will also go up. That's actually determined by the municipality that you live in. This is based on how much money they need to fund the operations of the municipality or city that you live. What really matters for tax assessment purposes is how much your property changes relative to the average of other properties that are similar to yours in your neighborhood. To give you some of an analogy for this, I want you to think of a pizza. Let's say your favorite pizza place in town is offering a promotion where you pay the same price for a small, medium, or large pizza. No matter how many toppings you put on it, it's one flat price. Let's also say that regardless of the size of the pizza, they're always cut into the same amount of slices. For this purpose, let's say 8. Whether you buy a small, a medium, or a large, there's always 8 slices of pizza. No matter how big that pizza gets, whether big or small, there's only 8 slices. This means that your share of pizza, assuming you're sharing with 7 other people and everyone gets a slice, is the same as everyone else's. This is regardless of the size. Here's where it starts to matter a little bit more. Let's say the promotion ends and the size of the pizza and the price related to it starts to matter again. This would be an example of a municipality deciding that they need more money from its residents to help fund the operations of the city. Now, what you were paying for that one single slice of a small is going to be increased if you decide to get a medium or a large because the price just went up. Here's another instance where things can get a little sticky. Let's say that there is one pizza to go around between 8 people and everybody gets one slice. But instead of you all buying the pizza together and paying the same price per slice of pizza, those slices are sold individually. And let's say person number 1 pays $1 for a slice of pizza, and person number 2 pays $2 for a pizza, and you yourself, you pay $1.50 for your pizza. Since the slices are all the same size, or in real estate terms, similar properties or comparable properties, the problem becomes when people start paying different prices for the same slice. This is why comparing your current home to that of similar homes in your area and ensuring that your tax assessed value didn't change dramatically compared to other comparable characteristically similar homes is important. I don't know about you, but I feel like pizza now, or buying a house. I'm not really sure which one. Probably pizza though. Real quick, let's jump into the year-over-year changes in property values in both the Fraser Valley and the Lower Mainland, so you can get a little bit of a North Star as to how much the values did change from July to July. These are numbers provided from the Fraser Valley Real Estate Board on both the Fraser Valley and the Lower Mainland when the statistics were released at the beginning of August in 2023. Detached homes in the Fraser Valley went up 1.6% year over year, and in the Lower Mainland up 2.8%. Townhomes in the Fraser Valley were up just under 1% at 0.9%, while the Lower Mainland was up 2.6%. And lastly, condominiums were up 2.5% in the Fraser Valley, while they were up 4% in the Lower Mainland year over year. So now that you know having a higher taxable assessed value doesn't necessarily mean that you're going to be paying more in taxes, how can you use these tax assessed values in different ways? And I'm going to break it down for you, whether you're a home buyer, a home seller, or just a homeowner not planning on doing anything. Just before I jump into these though, if you are someone that is considering buying a home, and this video is of course all about taxes, I want to make sure that I make available to you a free ebook that we designed to help people like you save a ton of money. The ebook's called 7 Incentive Programs That Save Home Buyers Thousands. What I will do is I will pin access to that so it's available to you to download for free in the comments. And also, we actually just put an 8th one in there, so it's kind of exciting. I just haven't changed the image yet. I digress. Anyways, download it. It's pretty valuable if you're looking to buy a home. So here's how home buyers can use these assessed values in their favor. Knowing the previous tax assessed value of a home can help you gauge a property's value based on market trends since that value was released. This can help you for home pricing purposes as well. So you can use a home's tax assessed value and compare it against characteristically similar homes in the same area that you're looking to buy. Not only that, but this can help you estimate future taxes on the home and plan more appropriately for budgeting purposes. And lastly, I'll touch on the fact that you can use it in your favor for negotiation with the seller. Even though between you and I, the tax assessed values are usually irrelevant for market value purposes because by the time they come out, they're already 6 months old. But that's our little secret. Nobody needs to know that. So if you are buying a home, that is something that you can sometimes use to your advantage to help you get a better deal. I just remembered that home sellers are watching this too. Well, let's arm you with some ways that you can use this tax assessment as well. First of all, it could assist you in estimating a potential sale price for your home. Same as my little secret that I just unveiled for the buyers, however, it's already 6 months old by the time it hits your mailbox. So while it can be a little bit of a gauge for an estimation of market value, it's really just a number frozen in time, at least 6 months old. However, it still will get you relatively close, likely pending there hasn't been any major swings in the market, to what the market value of your home currently is. As a home seller, you can also use this number to help negotiate against a buyer. If your property's tax assessment came in higher than what the current market value of your property is, oftentimes you can use that when negotiating with a buyer to help them come up to a more reasonable price so you can sell the home for more money. And the last one that a home seller might use this tax assessed value for is just estimating your return on investment since you originally bought the property. I don't want to leave my homeowners who aren't thinking of buying or aren't thinking of selling out as well. There's some ways that you can use this tax assessed value too. Just like the home sellers, you can use it for evaluating your return on investment, how much growth you have had in the equity of your property since you purchased it. Perhaps you're also considering refinancing your home. The assessed value is going to give you an idea of close to where the market value or the appraised value may be to even help you understand if it makes sense to approach a lender about refinancing your property or renegotiating a mortgage. And the last one that I thought was a little interesting was community insights. Based on what you're paying for your property tax, do you feel that you are getting your value's worth from your community? Do you feel your tax dollars are being appropriately spent? Do you feel that you are getting good value for your money? And if not, perhaps that leads you to considering to relocate areas or at least reaching out to your municipality to chat with them about how the money is being spent. So now that you're educated up, what's next? What happens next? Well, if you're a home buyer, let's remember that taxable assessed values are frozen in time and are at least 6 months old when they are released. And if you're a home seller, you want to remember the same thing. Market value is really what matters when buying or selling a home. And if you're interested in the market value of a property you're considering selling or considering buying, feel free to reach out to us by either emailing us or texting us or calling us in the pinned comment below, and we can help arm you with some information to make better choices. If you're the average homeowner watching this and you received your tax assessment in the mail, and you're considering either appealing or disputing that assessment, let me give you some advice and something that you can use. You likely know that you have until the end of the month to dispute your tax assessed value, which is something I've done for many clients in the past as well as myself personally. If you are concerned that the true value of your home as of July of last year is not being reflected in the assessed value that you just received in the email at the beginning of this month, let us know by sending us an email through the email address provided below. Not only will we help you understand if the assessed value from July of last year is even in the ballpark of what your property may have been worth at that time, but if we don't feel it is, we will provide you with a written report complete with comparable properties that are characteristically similar to the ones in your neighborhood, similar to the one that you own, that you can use to provide to BC Assessment Authority to help fight and successfully appeal your most recent tax assessment. A service we're happy to offer to the watchers of the videos on our YouTube channel. So there you go. Now you know everything you need to know about tax assessments. Let me know in the comments below. Did this video help you better understand tax assessments? Did it uncover some things that you didn't understand? Or maybe just let me know generally, were you surprised about the value that your tax assessment came in at? Please hit us up in the comments below and let us know. I'd be curious about what you think about the most recent tax assessment. And while you're down there, don't forget to support our channel by subscribing. Hey, look, I want to thank you for watching. I want to thank you for commenting. I want to thank you for subscribing. And we'll definitely look forward to seeing you on the next video. Cheers.